Yeah, except it's Friday night, mate, and it's 11 o'clock. So let's hopefully still on the ball.
Damn, I'm sorry to keep you up that late.
No, no, don't. It's a timing thing, right? And this is crypto. Crypto never sleeps. So I just
Yeah,
think
that's
that
true.
it's just one of those things, right?
You are
You
live
get used to
now.
it.
You are
Fantastic.
live now.
Okay, okay, nice. Yeah, well, nice to be here. Hey, CJ, how you doing?
I'm doing all right, mate. How things with you? It's been a while since we spoke.
Yeah,
It's always good to catch up regularly, but things have been so busy, right?
it has, it has. It's yeah, as you just said, crypto never sleeps, right? So we're in that space.
Yeah. And neither do we, apparently. So
Mhm.
you still get used to it after a while.
Yeah, it's late for
But
you, man. It's late for you.
no, age will creep up slowly over time, I think. I feel like sometimes crypto is a young man's game.
I'm sure you're not too old for that, for sure, man. Not
I'm, I'm I'm getting there, mate. I'm getting there, but it's all right. My age shall remain anonymous for now, but old enough, sir.
okay, okay, fair. Yeah, it's late for you now, though. Like Singapore time is quite late.
Yeah, it's 11 and it's a Friday night, but hell, this is worth it, to be honest with you. I love it. I think that AMA is where education becomes key. I think this is the
Mhm.
right way forward, and more of these should be done over time as well. So I think it's important.
Yeah, really. Thanks a lot for taking the time. I mean, we have it's knowing like working with you for a bit now, like I know how much expertise you have in this space. So,
Mm.
I'm sure the audience and the folks there will appreciate like kind of have this opportunity to pick your brain,
Yeah.
understand how crypto looks from your perspective. I think that's the interesting thing.
That's going to come across as boring, but we'll make it
Yeah.
interesting. We'll make it interesting.
Yeah, dropping some alpha, maybe that's going to be some interesting part then.
No, definitely.
Okay, I think
Cool.
we're recording. I wonder maybe we should give it for like a couple more minutes, see if folks are joining, and then kick it off.
Yep.
Nice. So how's Singapore today? How was your
Uh, it's always hot, mate. But no, I think the Singapore scene overall has been pretty good. Obviously speaking, Singapore's been losing out a little bit to Dubai and the rest, but
Mhm.
I still think there's a lot to be said for it. We are seeing good teams come here, uh, quite positive actually, constructive about it. So I think that's a really good thing.
Okay, that's cool. That's cool. Yeah, I noticed so many like partners and people are based in Singapore in crypto especially. It's
Mm.
it must be a hub there. I've never been, but I can imagine only how nice it is as a hub.
Well, you're welcome to make your way over, sir. We will host you well. We will host
Yeah,
you well.
well, for sure. We're gonna do that one day.
Yeah, that's true.
Yeah. Nice,
Okay.
nice. So I think maybe let's just slowly get it started. So
Mm.
you know, but
Yeah,
yeah.
sure.
So for people listening, this is AMA. It's with CJ from GSR. GSR is a partner of the DApp Oasis Accelerator, and overall GSR is a strong partner of Oasis at the foundation and the network. So we've been working together for many long time now, and it's very nice to have you on board here, CJ.
No, thank you for having me. It's been a pleasure. And like you said, you've been a great partner to the firm, and it's been a pleasure working with you guys. And I look forward to it actually to continue this relationship.
Yeah, for sure, for sure. And here today, kind of helping new teams, new startups who want to build their DeFi, their GameFi in Oasis, give them some
Hmm.
context on, you're obviously like a very good professional when it comes to finance services. GSR is a
Mm.
great firm. So there's a lot of there to unpack, to give a bit of information, your perspective, so that they kind of, we want to organize this so that the teams that are applying to the acceleration program, the point here
Hmm.
is to show who are we partnered with and what kind of like what can the partners offer to them. So, I think we can, that's kind of the modus operandi here.
Yep.
Yeah, but, let's just, obviously for audience there, I'm Ekin. I'm the BD lead at the Oasis Protocol Foundation, dealing with partnerships, dealing with acceleration programs and many other things. And do you want to say a few
Yeah,
words,
sure.
CJ?
No worries. Thanks a lot for that, Ekin. So yeah, my name's CJ. I run the Asian sales team over at GSR. GSR is one of the oldest market makers on the street. We've been around for quite a while. My background actually was I spent more than 10 years in traditional finance. So I used to be on the derivatives and multi-asset structuring over at Morgan Stanley. I moved to the private wealth side for a while before moving over to Nomura. Uh, and that was when I first came to contact with crypto. This was way back in 2017, 2016. Since then, it's been a bit of a wild ride. And yeah, it's an honor to be here, mate.
Okay. Thank you so much. Well,
Nice.
like these kind of like traditional finance terms are for like the audience. I think they're sometimes, a bit vague. They don't really understand when you say, fixed income, working for private banking,
Yeah,
like all of this stuff. Like, can you just explain a bit more about your
sure.
career in the traditional finance?
Sure. So the area I dealt with, I started off my career really dealing with financial institutions in the street. So these were banks, these were other insurance companies, for instance, large conglomerates as well. And what we used to look at was really efficient ways for them to hedge risk, generate yield, get access. So if you think about that in crypto terms, and really just to draw a parallel, it is very similar to what DeFi has become, right? DeFi is about getting access to yield. We do it via DeFi farming. Access, we do it with the loans and borrowing market. And there's a lot of parallels that we can draw in comparison. And the private wealth market, as the name suggests, we deal with a lot of high net worth individuals and family offices. And crypto has started to see more and more of that. There's a lot more crypto millionaires in the street, a lot of people who are better off because of crypto. And at the end of the day, I think what's lacking, and I think this is something where GSR tries to stand in for it, is to be the adult in the room. It is to be a guiding hand to say that, look, it's not a completely new frontier. There are similarities, there are parallels, and drawing these parallels, we could probably assist and move forward with it.
Yeah, absolutely. It's a lot of that kind of quick gains have, there's a lot of immaturity when it comes to the financials and how to deal with the space. So it's good to have a partner who's strong and more traditional in that way. So it's definitely value add in the space. And what do you then like? So just to understand, like GSR, like what is the offering to clients? And when people work with you guys, what are the different things they can get from you?
Yeah, sure. So when it comes to market making, so market making is a very interesting concept. And this is going to be a bit long-winded, but just to give an idea, market making has been around since the beginning of financial markets. Traditional finance has this. The biggest difference in traditional finance, for instance, is that when it comes to market making, all pools of liquidity are very centralized. It's done in a unique centralized location. I can give you an example. Let's say if you want to buy Tesla stock, for instance, you would do it on a singular exchange. And all the participants in the market will congregate on that same venue. So because of that logic, what happens is you have very strong pools of liquidity there. Everybody can trade. Now, crypto, unfortunately, is very, very different. And by nature of the fact that crypto is all about decentralization, spreading out everything and really access for everybody, what tends to happen is you tend to have spread out pools of liquidity. Now, at the end of the day, when it comes to spread out pools of liquidity, the issue you have there then is, imagine if you traded a token on exchange A versus exchange B. There will be different pools of liquidity, different prices, different spreads. And this is where the market maker comes in, right? The job of a market maker is to say, fine, let's assume and make it almost fungible in nature, where I can buy this token regardless of venue, and the effect is the same. So that's what a market maker does, and that's where GSR comes into the picture. At the end of the day, our job is to act almost like an infrastructural layer for crypto. Liquidity provision, if you think about it, it's not like stocks. In stocks, for instance, if Tesla stock goes up or down, it makes no difference. Tesla will still function as a company. But in crypto, if the token price has zero liquidity, well, then the underlying project starts to fail. There is no movement, there is no velocity of the token, there is no use case. It grinds to a halt, so to speak. So if you were to go that direction, you could go as far as saying that market making and liquidity provision within crypto is a lot more pertinent, it's a lot more important within the crypto sphere. And that's where GSR comes in. Our job is to act like the adults in the room when it comes to the capital markets portion of crypto and assist our client with regards to providing liquidity for their tokens.
Okay, that is indeed a valuable service to the space. You look at like any order booking or the executed trades in Binance. What I am imagining is that you guys and many other market makers are most of the volume there. Do you have any like kind of rough understanding of how much is like professional market makers versus retail traders in the crypto space?
So this is interesting when you say that. I think that this is where it really boils down to what a market maker should be doing. A market maker's job is not to influence price or volume. This is something there's a misunderstanding. There's a misconception amongst projects. A market maker's job is to assist in providing an infrastructural layer where people can trade the market and not have problems with things like slippage, not have fear about, I would love to buy this token and be part of the ecosystem and the community, but I'm scared that if I put in this order, I'm never going to be able to get out of it. That's what true
Yeah.
market making is about. If anything, and the way to look at it, and so the terms I'm going to use here is the terms of making and taking. Market making, as the name suggests, your job is to make levels. It means we put levels in the book. We allow people to trade. The way to think of it is if you were to see a book right now, an order book, it should look almost like a butterfly. Our job is to make that butterfly. It is up to the retail market, institutional participants to take from us. That is actually how true organic volume is formed. And eventually what you want to see is you want to see these participants almost trading with each other. That's when you know you have a healthy ecosystem. Our job is not to be your market. Our job is to help you create the initial market.
Yeah, that must clarify a lot of things for people because, market making is kind of considered as a black box, general for normal people who don't really deal with that. I mean, just the normal crypto traders and perhaps, the people building projects. It's kind of like, how does it really work? And why are you guys, like market making firms so large overall? I think one of the interesting things I've noticed is like when you go to like let's say OpenSea, when you go to any other NFT platform, and I personally own some NFTs. I know a lot of people who do that, and you get stuck in positions, right? The price fluctuates. There's no liquidity in the NFT markets. And I read something interesting that there's some market making groups are now looking into making markets in the NFT space. Like, is this something like that GSR is working on, or are you interested in this, or like how do you see this kind of NFT like market making working?
So it's really interesting that you bring this up, and it's an area definitely of interest to us. The NFT market has saw a massive growth and a massive evolution. I think though the interesting thing is that market making an NFT is more akin to auctioning a piece of art than it is to market making an underlying token. And I think this is where we have to draw that parallel, right? In a standard token market making concept, it's very easy. There's enough liquidity that you put a bid side, you put an ask side, because all the tokens are fungible. Therefore, you know that they hold the same value. NFT by nature and virtue of what it is, everything is going to be different. So how do you create a proper order book? Because imagine this, let's say you put your NFT up for sale. The only people who will be interested in liquidity for that are people who are interested in that particular NFT. So therefore, you have very limited pools of liquidity. It's almost like, remember we began this discussion talking about decentralized pools of liquidity. This is almost to the nth power, so to speak, because every NFT will have its own liquidity. I think the approach that may work for this, and this is something that is obviously still being explored, is really to provide where is the floor price? Where is that price where you can clear? Auction houses have it. When you get a piece of art, there is a clearing price. And that's where it goes through at if no further bids are received. I think that becomes interesting. And I think that's the direction that we're going to see a lot more of those people looking at NFT market making provide liquidity for. So I wouldn't call it outright market making. I would actually say NFT liquidity provision is probably a closer term. And I do think that groups will get closer and closer to it. And it's definitely a strong area of interest for us and something that we're looking towards as well.
That's interesting. That's indeed a different paradigm because like if you were able to really like look at the qualities of the art piece and then make markets for each of the art piece uniquely, you would actually like kind of have a formula to define the price point for each qualities and the kind of the aesthetics of the art. So
correct.
That's indeed a very difficult challenge.
So actually, you're bringing up a really cool point, and this is something that we've discussed as well internally, where we talk about really how do you define what is the value of the NFT. Yeah. I guess the easier way to do it, and let's not use JPEGs, which is the rage right now, literally 2D JPEGs, and that's what NFT markets become for now. But if you think about the use cases of NFTs and what they could really look at, in-game items, for instance, could be really cool. And that's where we allude to your point, right? Where you have multiple different NFTs of items themselves. The items themselves carry characteristics. And because there are similar characteristics between, let's say, a sword and an axe, for instance, attack versus speed versus, you then are able to categorize it where they have similarities. And that actually can create a marketplace of sorts. But that's not evolved enough yet. But that is definitely in my logic, that makes the most sense.
Interesting indeed. And then like I'm wondering also like, some of these like, let's say about NFT land and then it produces tokens and it gives access to future mints. Like you can like look into like it having some like future cash flow, some, options on another project. And it's like, there can be like some sort of pricing model, I'm sure, like at least for the
that actually is, I think the only thing then you'd have to be very careful is you just have to make sure that you don't go on the route of a security token. But definitely you could do something like that where you derive value.
Okay. Very cool. Very cool. Okay. So, you've of course been in the space for a long time. Just to kind of like, I want to like somehow understand how you see coming from the traditional finance space, moving into the DeFi in the space currently, and then looking at how DeFi kind of moves in the future. What is the 2.0, the 3.0 coming up? Like, I want to like understand how you think about it, particularly because, you know, a lot of the audience, they've, you know, myself personally, I never worked in the traditional finance field. I never really like understood how that works, and just jumped directly into crypto. So kind of that that perspective of, you know, transitioning to the DeFi space and all the crypto. So how do you look at that from, you know, transitioning from the centralized finance, the traditional finance into the DeFi, and then looking at how this space is going to evolve in like, you know, in 5 years, 1 year, 5 year, 10 year, whatever the time is.
So I think so. The biggest difference at the end of the day when we talk about CeFi versus DeFi, and obviously CeFi can mean a few things, right? Within crypto itself, as the purest comment, we can talk about centralized exchanges. Or if you want to go even further back, it's technically what traditional finance was all about, right? Literally, the biggest difference between the two of them is that concept of a middleman. It's that concept of socializing the ability to gain access to whatever the underlying product is. I think there is room for what CeFi does. At the end of the day, if you think about it, and we can even liken this to exchanges as well. In CeFi right now, what the benefit is it provides a framework. And it's a framework where people can play by the same set of rules. I think DeFi in its purest sense, as definition, makes sense. It is an access-based product. It does reduce fees. It removes the middleman. It removes complexity. The problem you have with DeFi, I think, right now is I don't think there's a proper framework for it. And I think that the rules, we think that they apply correctly, but I'll give you an example. Let's say governance tokens, when it comes to voting, for instance. And then ask the question, right? How many people in a community really own one token are going to go do one vote? The next thing that you got to ask yourself is that do a lot of DeFi projects run on the concept of majority wins? Well, if they do, then it's still going to be the largest token holders who have the ability to influence. If that in mind, then that's not the purest form of DeFi, because DeFi is everybody gets a voice and their voice contributes the same amount. So I think that DeFi in itself, in a current form, broken is a very strong term, and I don't think we are. I think we're evolving. I think this was the first iteration, so to speak. I think what we are starting to see is we are seeing things get better and better. And let's be honest, there's only so far out you can go DeFi. I think true innovation has yet to take place. I think we are going to see that acceleration occur over time, especially in the near term. But what we are now, we're at the very basic building blocks. We're at your AMM DEXs, for instance. We are at borrow lending platforms. We are looking at metaverse, gamify. These are all like infrastructural things that, if you think about it, is necessary for an ecosystem to evolve. The next iteration is going to be interesting because the next iteration is going to be people looking at a layer 1 and say, wow, this DEX has flaws, has weaknesses because of so and so and so. So I'm going to do it better. And that's what we're going to see. This natural competition, I think, will drive DeFi to a better space. But I think what we need to figure out as well is, at the end of the day, DeFi is about the people. It's about the ecosystem and socializing it, right? So we need to make sure that there are mechanisms in place to protect people. DeFi rug pulls, exploits, they happen more often than not right now. And this creates a fear, right? A natural fear for people. So I think one aspect, that of security as well, comes into play. And I think that's something that needs to evolve a bit better, especially in the DeFi universe.
That makes a lot of sense. What are some of the, you know, some of the projects that you're looking at yourself now, considering, you know, there's a bunch of lending stuff, Aave, you know, others, there's a lot of DEXs. Like, what are the kind of things, like, just, you know, the projects and products that, you know, you're interested in and passionate about yourself, some specific areas maybe of DeFi?
So I think that we still haven't reached that critical mass where the building blocks are in place yet. I say this because, and this is going to bore probably a lot of the audience, but this is really how it goes, right? I think that for there to be continued growth in this space, the financial market nature of DeFi needs to grow to the next level. DeFi is not going to grow if we just rely on gamify and metaverse. We're going to need things like the DEXs to improve. Not only that, borrow lending, options, for instance, and things like as basic as being able to extrapolate a yield curve, which to a lot of people, they don't know what that is, but you would realize that a yield curve, what it allows for is longer term to borrow lending, longer term financial products where it gives more access. So I think that there are these building blocks which need to evolve further. And I think they are. We're still starting to see a lot more projects looking at this right now. I think what I like, though, is a lot of the initial projects we saw, which were the basic stuff, right? Aggregators, so to speak, or very basic mechanisms in place. I think those have tended to either they've improved or better iterations have come out. So I think that's what we're looking at right now. It's still very much, we look at, if you think about the gold rush, we're looking at the picks and shovels. That's what we're looking towards. And that's what we think will bring it to the next level.
Okay, better picks and better shovels in this case.
That's the aim, mate.
Yeah. Okay. So, you alluded to like taking the space to the next level. So, you mentioned like getting protecting people rug pulls. So, I'm sure like some regulatory standards or industry best practices there. Generating products that are longer term. But one of the things I was really interested in, like hearing your opinion on, is kind of the identity aspect. So, when you make a trade with somebody in crypto, or you use Uniswap, for example, you don't know where the money is coming from. You don't know the counterparty. And I'm just kind of like, from your point of view, as kind of an institutional investor or institutional in the space, like how big is that problem for you? And how do you see that being solved, when it comes to like really creating decentralized identities on chain? Is that a problem? Or what do you see? What do you think?
I think it depends what is the vision for DeFi. Now, if DeFi's vision as a community is for retail institutions to play together in the playground and not kick sand in people's face, then in its current form, it won't work. And the reason why is there are different standards between institutional players versus retail. When you're an institution, for instance, you have people to report to, right? If you're a listed corp, you've got shareholders. If you are a licensed financial institution, you've got regulators. And one of the key things is you need to know who you're trading with. And that's how that works. So I think what I envision happening is a lot of these DeFi platforms, and to be fair, we are seeing it now with the more advanced financial-based DeFi projects coming up there, where they say, fine, we understand that institutional guys and retail guys play by a different set of rules. Let's set up two different buckets within our project. One bucket is where retail comes to trade, or retail comes to use the service. The other one where is this stronger KYC element. Know your client, know your business, know your vendor, for instance. Now, the interesting thing then is once you have all of that, is there a way to bridge the two from a liquidity standpoint? Meaning that they have access to the same pools of liquidity within them. I don't think it's an impossibility. I haven't seen it fully done yet, but I do think that, and this is something that I think is really interesting. A lot of crypto folk in the retail side, they don't realize how large institutional capital and funds is really big. Like if you talk about the largest insurance funds, the pension funds, the sovereign wealth funds, if they start looking at this space in size and start allocating capital to it, it's going to move the market. And so because of that, we want people like this in the market. So what we need to do if we want them in it is we need to give them the right playground to play in. And I think this is what we're going to see the evolution of within DeFi.
Interesting. Okay, so like what you just said about like having these different liquidity pools for the retail and then having it for the institutionals, and then kind of like going for DeFi kind of was the, as you earlier mentioned, kind of a force to remove the middleman. Like this kind of sounds like that there is something, that there's a possibility of reintroducing the middleman, if the retail needs to be verified and somehow kind of made sure that they can interact with the same pool as the institutionals. Like, does that generate then like space for a new middleman in this, like in the DeFi? What do you think?
I think it's the nature of the middleman. And I think this is what's evolving. I think that the problem that people had historically was the middleman was this centralized institution and the bogeyman, so to speak, right? Someone that we don't understand, that we don't have access to, right? I think that what we are seeing is a lot of these projects themselves. I mean, if the underlying platform, for instance, runs itself like a DAO and a purist DAO at that, then suddenly the middleman becomes the community. And I think that could be an interesting aspect. We're seeing a lot more DAO tooling, so to speak, come to the fore. I think that could be a way forward for this.
That's actually super interesting. Okay, cool. Yeah, I haven't thought about that like as a community as the middleman for DAOs. That's somehow unexpected. Let's say like this. This is probably going to be thought provoking for many people. I'll let that sink in. So there was another thing, I know also GSR, invest in some projects, and you partner with a lot of the many different partners, and you also invest. So from all this experience, I wanted to, and this is shifting a bit gears, like I wanted to understand, like with all your experience in this space, like what do you like when you work with a team? Like what are the things that indicate to you that a team is successful? like is going to be successful in the future?
Mm. If I had a crystal ball to be able to do that one, I wouldn't be working anymore. Put it that way, right? But no, let's take it a step back. I think you will never know what is a successful team. The best feeling that you'll get is what's a professional team. A professional team with a so-called good head on the shoulders, right? The ability to have the right stacks in place to grow a business and to scale. When it comes to investment, I think that's what we look for as well. I think a team needs to be balanced. I mean, at the end of the day, this is crypto, this is tech. This is not like setting up a supermarket, for instance. And what that means is the people you have, you need to have both sides of the equation. You need to have the technical brilliance, the vision, the dare to dream. But you also need to have the type of people on the team who are like, all right, this is how we organize it, this is how we grow it, and this is how we actually make it into a real business. I think crypto for the last 2 years has really been about hype. It's been about that concept of, yeah, this is cool, this is new, let's get everybody in and let's all think and buy art together. I think what we're going to see though now is people are going to take a step back and say, okay, fine. So what is your business? What are you really building? How are you going to make money from it? And how is it going to add value to the ecosystem? So I think that's what we look forward as well. And sometimes it's not so much a thing as a VC looking at it and saying, oh, who are your other VC players? Because I will only invest in projects with VCs who have proven 20, 50x investments. Sometimes it's looking at the VC cap table and saying, okay, your guys on this table, they're going to help you strategically. They're going to make the right introductions. They're going to guide you. And because of that, you're going to improve. I think what we're going to see conversion, what we look forward to is taking that balance between investing it as a crypto startup, but also looking towards it as a proper business. And how would you scale that? So that's the approach we tend to take.
Yeah, absolutely. It's also talking to a lot of like early stage teams and who are looking for investments and raising their rounds, like there's a lot of kind of idea of like what is the VC going to bring to the table aside just as just the money, because there's a lot of sometimes they're even a bit critical of firms that are just giving the money and taking very hands off, because what they really need is support and partnerships. So like as a partner, GSR, what does it offer to the firms that it really works with? Like how do you work with them now? How can you help?
So this is actually interesting. This is something that we discussed a lot internally, and in a way has been a godsend for where we sit. So this is why as well, and you've described it perfectly. Historically, when it comes to the VC space, a lot of them are who can you bring, and they bring in more connections, which are actually more VCs, and therefore there is more money. So money is abound. I think where GSR comes in is we cover a completely different aspect of a project that projects themselves don't think about as much. I mean, it's great as a project, the concept of price watching and praying that you get on the biggest exchanges in the world, right? But I think that there is more to it than that. There is a way for understanding how capital markets will affect the underlying project, will affect things like market cap, your price, your ecosystem. It will, and sometimes it's as simple as saying that this is the right thing to do. Because at the end of the day, the way GSR market makes and our approach to business has always been a fair and ethical approach, meaning that we ensure that we are price agnostic, which is what you want from a market maker. We don't influence any form of price, be it up or down. We don't influence any sorts of volumes. And these things tend to be very, very important. And at the end of the day, where we see ourselves is we are the educators in this space when it comes to this area of the market. We work with projects, we teach, we guide. And hopefully, and we make them try and understand that overnight success, while it's great, is more uncommon than people are led to believe. And because of that, it's about building a good project, a good ecosystem, and a good community. Once that is done, or as that is being built, it is up to us to ensure that this community can trade the underlying. And that's where we come in. So our value add is in regard to the capital market space. And it's a very, very strong value proposition we find.
That is such experience that I know not a lot of teams have. They do not have understanding of this space when it comes to the capital market side. So, for the audience, like, do you have any examples in mind of like, early stage team? You mentioned like, the market cap, the price, how does all of that impact the ecosystem? Like, do you have an example just to give a bit more concrete stuff for anybody listening out there who has a team, who's building their project, and they really want to understand, okay, so you're mentioning, the market cap and the price and so on, but like, how do you think about it? What is the concrete kind of things that you can do to assist these teams?
So I think so. The way we work at GSR as well is a few things, right? And I'm not going to talk about the economics model because that one I wouldn't say it's proprietary, but I would say that every project is different when it comes to the economics and how it should work. But what I will say is the approach we take is we just try to take an all-encompassing one, and it begins as early as helping projects when they ask us about token economics in terms of vesting schedules, cliffs. We have a look, and based on our experience, we say, look, this is too aggressive. This is going to cause a dump. Why do you have so much unlocking at this point in time? Does it make sense? Not only that, I think a lot of projects, what we've seen, which is the dangerous thing to do, a lot of projects tend to throttle day one supply tremendously. And the reason why is they just want to make everybody happy because their token goes up, let's say 20x, 15x. What they don't realize is that this is detrimental. If this happens on day one and happens too quickly, what you do is you scare off other buyers. And what that means then is as you release more tokens into the market, there's no one to buy it. So this is how we guide on this aspect of the business. The other areas of the business where we tend to help are exchange strategy and introductions. We work with projects teaching them this is the way to get listed. We don't guarantee listings, but we guide you. These are the exchanges you should talk to. This is what you should expect to be charged. And this is why it's so important to get on exchanges at the end of the day. And I think when it comes to the market making side of the business, I think this is what a lot of people don't understand. It's very easy for a market maker to come and say, okay, I'm just going to throw deep books both sides of your token. But if your daily trading volume is, let's say, a small number, there is no point you have the deepest books each side. Because literally what it does is it turns the token into a stablecoin. What you need is organic pricing. You need books which are thick enough to entice people to trade larger sizes than they would have normally, yet still be organic enough that as volumes pick up, there is room for further growth. So I can give you an example. Imagine if a project does not use a market maker. Normally what that means is your depth is terrible each side, probably $1,000 each side. Now imagine you've got someone who comes to the table and says, oh, I want to buy your token. I'm going to buy $500. If he sees that with $500, he's going to move your price 3%, for instance, he's not going to buy 500 anymore. He's going to say, okay, I'm going to buy 50 now. Whereas if you had a market maker who created decently attractive books, the guy looks at it and says, oh, $500 doesn't really move the market. I could probably go up to $1,000 for having any effect. This encourages greater volume. But at the end of the day, while we facilitate this aspect, it is still down to the project themselves to ensure that they do the correct marketing, the correct product growth, hype, community build. What we do is we let the community trade when it comes time for it. So that's how we tend to work with projects in the long term. And obviously the last part about it is reporting standards. We're suckers for data. I think it's very, very important because projects should know how you're doing on a daily basis. What does your bid ask look like? How deep are the books? How much volume are you really trading? I think these help a project strategize. It also helps the project reflect upon the effect of announcements. Oh, we've got a partnership announcement. What was the volume like that day? Was it real volume? What did it come in large clips, or was it everybody just buying into it? These sorts of things help from a very strategic undertone, and that's what we pride ourselves on.
That is extremely insightful, like that just, like looking at CoinMarketCap, when I open that, you see like when the token is released, it's usually a giant spike and then, it slowly starts to fade off. Having people to advise on this for projects is extremely important because, oftentimes you see that the project literally just disappears after that. They die off after having a bad release of the assets. That's a cause that is probably new to many people in this audience. Yeah, and also just the idea that like having the order books that are thick enough on both sides, that also support some people who want to get in and out, but also allow for organic price growth. This is extremely like valuable because I think projects really don't think about this stuff that much. It's usually about building the product, getting the team, raising the investment, and then they release the token. And, then it's like, what's happening now? And they are kind of at the mercy of their investors. They're at the mercy of the markets overall. And this is where a partner like GSR for sure can, make a lot of difference. I think just to mention also a bit about the acceleration program that we've partnered together on. So this acceleration program, it's with DappRadar. DappRadar is the leading indexing site of Web3 applications in the entire world. So you can see from many chains, different, gamify, DeFi, all sorts of different applications. And we partner with DappRadar because we know the kind of reach they have and the ability to promote projects. So in this acceleration program, there's still 2 more days to apply. So this Sunday, we're going to close all the applications. And the companies that are selected to this program, they have an exciting opportunity to participate in a 4-month-long program that finishes in September. And in this program, we will give the companies a grant. They will get a grant to support their development work. And we will also map out what are the specific needs of each of the companies that are in the acceleration. And we will bring in mentors. We will organize workshops and give support in the areas, because some teams require technical assistance, some teams require community, some marketing, and some just need partners. So, aside of GSR, we have many other partners in our networks. There are some NFT marketplaces, some DEXs, some, investment firms and so on that can help you with whatever needs you have. So this entire program culminates in September, where in September we have a demo day. And in this demo day, the companies that have built their products in the Oasis network have the opportunity to demo it to investors, gets a lot of community hype, get a marketing from the foundation, and get, that kind of hopefully a strong start for the, end of 2022. So, if you're out there, you're thinking of building your product, please join. We have exciting opportunities for you guys. I think we're closing towards the end here, CJ. But I think it would be really nice, if you have any advice to new teams that are developing DeFi projects, what would you give them as advice now if you would have to do it based on your experience?
I think so. I'm not gonna give advice on the technical side. I think there are a lot of smart people that are there than I am. I will say take a step back and really understand who your target market is. The products you're building really have a very defined target market. I think a lot of projects that tends to blur the lines. And honestly speaking, when you come up with your target market, divide it by 2. That's most likely where you're going to be your starting point from. Not only that, be patient. I think a lot of projects, and unfortunately, it's just the nature of investing I see in crypto. A lot of investors are very impatient for companies to do their token generation event. I think that sometimes that's not necessarily the right approach. I think build. Build if you've got enough runway, build and build well. Have something to show for it. Because then what happens, and this alludes to your earlier point, right, where you've got that spike and then it just dies up and the project dies. If you have something ready, something go to market, something that you can improve upon, once you have done that listing, that initial launch, you are then able to capitalize on it. Because people are going to buy the token, they're going to wonder who it is, they're going to start doing some research, realize you have something that works, something that can be used. And then what you do is you continue to improve. This is very similar to how you would do a business, a startup, for instance. And I think the same rules apply. I think also for a lot of teams who are starting to develop, start considering all aspects early, be it, like you rightly pointed out, community, marketing, hype, even market makers and capital markets, as well as listing strategies. I think these things, the more you get it ready, the less stress you face and the less irrational choices that are made. So in general, I think that's how I would advise most new teams.
That's some valuable advice. That's very valuable. I hope people in the audience have learned a lot from that. So yeah, CJ, thank you so much for your time. I know how busy you are, so I don't want to keep you any longer. But I really appreciate you coming here, being a partner at the DAppRadar Accelerator. Thank you so much.
No, it's been a pleasure. Thanks for having me as well. Take care, sir.
Perfect. Awesome. Bye-bye.
No worries. Bye.